So, without further ado, I have the honor of introducing Mark Mellum. And Mark is a senior VP at Westbury Bank, located in the Madison office. Westbury is an $800 million community bank headquartered in Pewaukee, Wisconsin. I hope I pronounced that correctly. Mark has been banking in the Madison market for the last 20 years in various roles, most recently at the Huntington Bank for 6 years, where he led a team of bankers across the street. He joined Westbury a year ago to help grow the Madison market, focusing on commercial real estate, manufacturing, with a niche in the dental industry. So I'm going to let Mark take it over from here. He's going to talk about the Paycheck Protection Program. Thank you so much, Mark. Oh, you're still on mute there.
How's that?
That's good.
All right. Thanks, Ruth. Thanks for having me, everyone. Ruth had asked me just to kind of speak a little bit to the PPP program, and I thought I would do it, kind of give you a little bit of the background, answer any questions you have, where we are in the process, what has changed kind of from a bank perspective, maybe what some of your customers can expect going forward or have been through during this process. And then the last stage is the forgiveness of the PPP, which is still kind of undefined, but we are getting some information on there. And then answer any questions you have and go from there. So if that sounds good, I'll get started, and feel free to fire away questions anytime along the way. So the PPP program actually began where we could take applications back on April 3rd. We knew that the date was coming, but we did not have any guidance at all from the federal government or SBA. So the day that we were able to begin taking applications was Friday morning. We finally got some limited information late at about 9 o'clock on Thursday night, the night before. So when you heard that the rollout of the program was not all that smooth, that is a fact. And the fact was mainly because the banks just didn't have any direction on what they were doing. Banks were holding out to try and make sure that they had limited liability in this process, as we were basically a conduit from the Federal Reserve, federal government, SBA, to get the money into the hands of the businesses. So we relied completely on what the customer told us. If they misrepresented anything, had fraud, miscalculated things, and the amount that they were asking for, anything like that, we did not want to be held responsible for that. So those were some of the things that were getting ironed out at the last minute. So there's some basic requirements at the time of application that were needed for a business to be able to qualify. They had to be in business in February of 2020. They had to be 500 employees or less. They must apply in good faith, meaning they needed the funds. They needed the funds to retain employees, to continue operations, pay their rent, pay utilities, things like that. And that was a big thing for a lot of the companies, was who's going to decide whether or not we actually needed this money or not. So about 6 weeks or so into the process, the SBA and the Fed came out and said that any loan, PPP loan under $2 million was deemed to be done in good faith. So any of the smaller under $2 million PPP loans was basically predetermined that there was a need, and they weren't going to get further audited on the back end of this deal. So April 3rd, this was funded with $349 billion of money. Everybody wanted their part, their piece of it. It ran out on April 16th, leaving a lot of people that really needed it without it. And I think there's a couple design flaws in the program along the way. First of all, the first week, only companies, basically non-sole proprietors, the 1-2 man woman shops, couldn't apply. They were held out until the 10th. So a lot of the really small companies that really needed it, the one-person operations, couldn't even get in the door until a week later. And you probably have heard on the news and seen on the news, a lot of the bigger banks, obviously they take care of their larger customers first. So it sucked up a lot of the funds right away, leaving not a lot left for the smaller folks. So we were actually inputting applications here from customers on April 16th, and SBA just turned off the switch. So we had one person that was mid application and they ran out of money, and we had to sit around and kind of wait and hope that the SBA and the government would step back up. They did. Again, on April 27th, they refunded the PPP program with an additional $320 billion. In that couple week time period, everybody who didn't get in on the first go round were obviously really anxious whether or not they were going to get in or not. And that kind of exposed, I think, where you maybe have heard, and hopefully you have, where the community banks filled a really big gap in this process. The big banks, the Wells Fargo's, US banks, Chase's, PNC's of the world, their customer base was so large, and their system was that they made was, I don't know, poorly done or couldn't handle the flow, that they were literally telling their customers to go to a community bank in order to do this and get it. And I can tell you, Westbury Bank and a lot of the banks our size, similar in market, you can figure out who they are, really took advantage of this, and we're able to serve some other bank customers, which are now turning into customers here. So it's been good from that standpoint. Originally, this was supposed to end on June 30th. It did, but then the government extended this out till June 8th. And there's still like 116 billion of that original 320 billion second tranche of money available. So I think people who are applying now are just now realizing that they should have done it, or were asleep at the switch for a while. We were getting 40, 50 applications a day early on. Now we get like 1 or 2 a week. So it's pretty much run its course. The calculation for folks, and this was another thing, April 2nd, they said this baby's going live April 3rd, but we're not telling you how to figure out what the right number is that people should be asking for. The math is generally a loan amount they were qualified for was 2.5 times their monthly payroll expense. But as you can imagine, sole proprietors don't necessarily have payroll. A lot of times they just have a bottom line. People pay different things. They're supposed to be able to add utilities. None of that guidance was clear to us as bankers or to customers when they're applying. But essentially, we and all the other banks kind of took it upon ourselves to figure out how to calculate that out, give the best direction we could to the customers, and go from there. So it was originally intended to be used to cover payroll for an 8-week period. If you remember, when the pandemic first started, this was supposed to be like a month or 2 deal. This was going to get everybody through it. Since then, that has been amended to 24 weeks people have to pay it out. And it was originally supposed to also be 75% used for payroll, and that's been changed to 60%. So those two things are important for a lot of your folks and our folks, specifically people who own, I would say, restaurants, the higher rent places. So if you think of State Street, you think of other bigger cities where a company's main liability is their rent payment, not payroll. The PPP program, as it was originally rolled out, wasn't helping them. And they weren't able to actually literally spend the money on payroll like they had. They needed it for rent, utilities, and all that kind of stuff. And along the way, the guidance was continuing to come out. But there was still a large portion of the population that were missing the boat. So the terms were changing quite a bit. Where they landed on that this is a 1% loan for a 2-year period with 6 months deferral. So basically, if the customer applied for a $50,000 PPP loan, they had originally 8 weeks to blow that out at 75% to the payroll, changed to 24 weeks with up to 60% towards the payroll. I'll get to the end on the forgiveness part because we're not there yet and we still don't have all the information we need. But there is a likelihood that customers won't use all the money. It would be possibly deemed that they didn't qualify for the amount that they asked for. Like I said, they couldn't spend it all, whatever. At the end of the day, if there was money left after it went through the forgiveness process, this would be turned into a 1% loan for the remaining 18 months. So we'll see how many of that actually happens. I don't think there'll be many. I think with the changes in the rule going to 24 months and only up to 60% on payroll, that most of these folks will be able to spend it.
Mark, I just wanted to get clarification on one thing real quick. Did you say that the newest extension ended on July 8th? Did I
No,
hear
you
that?
can take applications up till August 8th now.
Okay, good. So we still have time if anybody is needing it.
Yes.
And then I do have a question from Janine. She's asking, and you may cover this later on, and you can go ahead and tell me that if that's the case. But she's asking, will forgiven loans be considered loans for or income? Sorry. Will forgiven loans be considered income for tax purposes?
Yeah. No, I am not an accountant, but my understanding is that no, they're not to be considered income at all. It's just basically it's a payroll free money for folks to use to keep their business afloat, keep people employed, keep people paying their bills, rent, and all that stuff. So
And contact your accountant.
Yep. Yes, that's what we say.
All right, that's it for questions at the moment. Thank you.
Okay. So all the banks have kind of got their money out the door now. Very few stragglers coming in. We here at Westbury, we did a kind of a back end audit just to make sure of all our 400 or 500 files, whatever we ended up doing, that we had the information we needed to be able to prove that the customer was actually in business and operational in February of 2020. So if you were a startup in March and had all the same pain as everyone else, you didn't qualify for PPP. We didn't take the time, and no bank took the time up front to make sure that all the marks were hit, that we had all the documentation, that we had all, proof that they were in business, all that kind of stuff. We had the application which they would send us, and we would rely on that. We would ask for the info. We try to validate it the best we could quickly, but it was more critical, and the direction we got was to get the application in, get the loan funded, get the money out the door into the hands of the customers. And if there's problems along the way on the back end, we'll deal with it later. So you've probably heard there has been some fraud. There's always some bad guys and girls out there that were forging some documentation. They're 941s, which are their payroll, which they report to the government. They provided some fake ones of that. But not a lot, in my perception, just from being really engaged in this. And I actually helped support our branches, which we ran about another 320 applications through, looked at a lot of them. And there was a true need. The program has not been perfect by any stretch. But I think at the end of the day, when you look back on it, it will have served its purpose. It kept a lot of people in business. I have some really nice emails where their folks could not get it done. We're not getting communication. They didn't know where the heck they were in the process, in the queue at the Wells Fargo's, at the bigger places that just got bogged down. That this kept them afloat in business, kept their employees working as they dealt with the change in their demand for whatever product they were selling or service they were providing. So, speaking about forgiveness, that is still a big unknown. Essentially, what the direction we've been given so far is that there's going to need to be some level of documentation to show that the money actually went out of the business and got spent for the right things. Although there's a thing in Congress right now that all the bank lobbyists and a lot of the small business people have signed and sent to the SBA and to the federal government that says any PPP loan under $150,000 should be considered either a grant, basically meaning automatically forgiven, or super streamlined, like a one-page forgiveness application, which is essentially as long as they send it into the bank, it's forgiven. So we'll see. We're all hoping for that. About 86% of the number of loans for all banks in the United States were for loans under $150,000. So that would, if we were only left to really make sure that that 14% really got used for what it was supposed to be used for, that would lighten the burden off the banks a lot. Because the process, as I understand it, is the companies are supposed to be tracking how they spend it, be able to provide documentation, submit it to the bank. We look at it, make sure it looks good, and then do something to say, you're forgiven, which it seems like a lot of responsibility for a bank to try and own up to. So it's still unknown. I think one of the reasons they kicked it out to 24 weeks is so that they could further define that. But we will see. You probably did hear, it was kind of interesting that they kind of self-regulated themselves early on in the process when the news reported some of the larger companies that took the PPP money, they essentially got shamed into sending it back. I had the number written down here. I don't know if I can find it, but I think it was something like $40 billion, or not $40 billion, that's it. $31 billion got sent back to the government from companies that took it and then kind of got shamed into it. If you remember, the Los Angeles Lakers did it, Shake Shack took it, Ruth Chris, some of these people that either have a lot of cash reserves or have access to capital in other ways, took it and sent it back in. So that was kind of unique. We did have a number of customers, not a lot, but I can think of a handful that evaluated the program, determined their need, if they needed it, and decided that they were going to pass on it, even though essentially I think everybody can make some level of argument that it is needed. There's still some folks out there that passed on it. We've had a couple people too, and it's made me feel good to see it, that asked for a fairly significant amount less than they qualified for. So no, I only need 50,000, even though I could get 150,000 and get it all forgiven. Just give me the 50, that'll get me through the day. So that was nice to see some of that. As a bank, our size community bank, we did over 500 loans in this last couple months. The SBA said that in the first 14 days, when they ran out of money, that they had done the equivalent of 14 years worth of SBA loans in 14 days. And it is all hands on deck. Every bank was working on this. Some people had a little better mousetrap than others. Jobs saved, various banks track that. I don't have that exact number for us, but I can tell you that it loosely is in the thousands and thousands and thousands of jobs, at least for the April, May, June timeframe, while they had these funds in order to pay their employees. There are some interesting circumstances where employees were on FMLA, different scenarios where the companies would call us and say, hey, what do we do? I need to pay them in order to get this money out the door to meet the 75% threshold. But I'm not supposed to be paying them because they're on leave. All kinds of unique situations like that popped up along the way. The answer to that question is you pay them. The employee got lucky; they get to double dip, because it was more important to get the money out the door and meet their initial rules than to not spend it and have a 2-year 1% loan with some unforgiven funds. So it's been a really good process overall. I think you've seen and you hear, and if you talk to folks, the community banks really differentiated themselves through this process, just with the ability to act quickly, get the money out. We had some backlogs too, don't get me wrong, but we could do it by working 10, 12-hour days instead of not doing it at all, like the big banks. a lot of them couldn't deliver on it. So next steps is really just waiting for clear guidance on forgiveness. Hopefully that all loans under 150,000 are fast tracked, makes life easier on us, and then we go from there. So that's really the majority what I had, Ruth.
Okay.
I don't know if there's a bunch of questions or anything like that.
And I don't see any additional questions at this point. We'll just wait a couple seconds, let anybody raise their hand or type in a question if they would like to. Is there a place where folks can find additional information online about the PPP loan?
If you go, yeah, you can Google it, but if you go on the SBA website, that's where the real guts of it are. The real detail kind of bore you to tears, but you can get the info you need for sure.
Okay, good. All right. Well, I don't see any additional questions. Oh, okay, we've got one. Okay, so from Janine again, some small businesses applied for Dane County Relief Funds and WEDC. We're all in it together funds. Will SBA forgiveness factor in the fact that they received those funds as well?
Well, that was another example, that EIDL loan. I can't speak to the Dane County one, but the EIDL loan was the precursor to the PPP. And so some folks got the $10,000 loan, then applied for PPP, and there was not clear guidance along the way for the first few weeks. But essentially, if they applied for an EIDL loan, got the $10,000 before April 3rd, it had to be added to the PPP and paid off with the PPP funds. And then it gets crazy, because then it's like after April 3rd, but before a certain date, if they had the $10,000 loan, but use it for payroll and can prove it, then the PPP funds didn't have to be used to pay it off. And then there's a third thing is goofy. I can't really speak to the detail, but I would say the majority of folks paid off the PPP, the EIDL loan, at least with the PPP.
Okay. And it sounds like sole proprietors and LLCs do qualify for the PPP?
Yep. So we did a ton of sole proprietors. The people that got left out are a lot of the real estate investors who show a loss at the end of the day on their tax returns without employees. So because they have interest expense depreciation, they show a loss. You might have a need, but you didn't qualify if that was the case. Okay.
And then last question here is for those seeking forgiveness after the 8 weeks or the 24 weeks, whichever they choose, is it an application to the bank or to the SBA directly?
It's going to be to the bank. There is some forgiveness applications out there. If that law passes where there's a one-page quickie deal, that'll be nice. It all comes to the bank. The banks don't have a process for what it takes to do it on our end to grant forgiveness yet. We're waiting on that. But yeah, whoever you worked for to get the PPP money originally is probably who you're going to work for to get it forgiven. And we've just told folks, contact your CPA, track the heck out of everything you do so that you do it. What we did, and I think most banks did do, was if they were current customers, they had a checking account with us already. If they weren't, we opened one, dumped the money in there. We can see that the money is going to payroll every 2 weeks, things like that, and kind of help support them with the documentation.
Okay, perfect. And you don't just, even if you receive the loan and you're past 8 weeks, because there is no clarification, there won't be any penalties if you don't submit that forgiveness form yet.
No, because it's 24 weeks now, and I don't know what 24 weeks from April 3rd or whatever the day is you receive the money is. But we've got some time. They've got some time.
Okay, good. All right, another minute for questions, and I don't see anything else having popped up. I don't see any hands raised. Give it just another second.
Yeah,
any final words, Mark?
Yeah, I would say if you have some additional questions, you didn't want to raise your hand, or you are talking to people who still have missed the boat and need to talk to somebody, have them call me, have them call their community bank. That's probably your best avenue. But we're happy to help. I mean, we're just a conduit to get the money out the door. I should have mentioned, banks do get a little bit of fee on this for the labor, but nobody's getting rich. We're kind of all stepping up, doing a service more than anything. So.
Okay, great to know. So your email is Mark mark.mellum@westburybankwi.com if anybody
Correct.
would like to get a hold of him, or reach out to myself, and I'll be happy to share his email with you as well. All right. It is almost 9:30, and we'll let folks jump off unless there's any final questions, which I do not see any. So thank you so much, Mark. We really appreciate you being here, and we will look forward to working with you in the future.
You bet. Thank you all for
Thank
your time.
you.
Appreciate it.
You have a great
Bye.
day.
You too. Bye.